Welcome back to Invest Global. Today we're going over portfolio construction in the crypto market. Now, I've been asked this so many times and actually recently put out a poll and asked in our Telegram group, what would you guys like to see the most? And this was what was requested. So basically what I'll be doing is giving you a framework that you can use and actually adapt every single month to continually sharpen the saw. As the quote, I think it was Abraham Lincoln said, give me 6 hours to chop down a tree. I'll spend the first four sharpening the axe. This is sharpening the axe. The really 2 hours left is the implementing, right? So that's why on this channel I do some videos basically explaining some of these things, explaining things like, exactly how to use a decentralized exchange, exactly how to use some of these other decentralized finance protocols. But again, that's kind of the second step to this, right? So this is kind of the planning, the preparation stage. So you have the best knowledge, you have the best approach to the market, and you can actually continually improve that. Again, so many people still think black and white. They think in this binary way of, $1,000 to construct a crypto portfolio. Give me the coins that I put in it. No, because that would be the worst thing for you because you wouldn't learn. That's not a long-term way of thinking. That's kind of more Epicurean in a way, right? So you're thinking so short-term that you're just like, feed it directly to me. That's not what you want. What you want is a process that you can use, you can adapt for yourself. And that's why this board here, I just used Miro, which was used to be like different kind of a domain name, but it's my favorite way to kind of do mental maps like this and really hone down in a process, really systemize things. Okay, so basically it's as you can see, it's really structured from the scientific method, right? So I think it's something that most of us learn in school. Doesn't really get used that much outside of school, but I still like to use it myself. This is kind of a mixed version of that, a mixed version of the Socratic method of thinking, which really the I would say kind of the birth of critical thinking. While here in Athens, Greece, I've been doing a lot of traveling around this summer. Slowed down on the daily videos over the past 2 weeks while going through the Netherlands, Luxembourg, Belgium, Germany, Poland, now here in beautiful Athens. Gotta love it. So basically to get things started here, and also throughout this whole video, pretty much anything that I refer to, talk about, will be linked down below in the description, including these links and links to other videos that I may mention throughout this, because some of these things, I'll explain the overall concept of an idea, like how to do your own research, for example, in this kind of second part, fundamental on-chain technical and sentimental analysis, that if you really want an in-depth guide to that, that's in another video, right? I don't want to take up time in this video to go over all these concepts that I've already explained in previous videos. That's kind of the whole idea here, is like building blocks. So firstly, we're starting out with the question, okay? So in any kind of system, when you're going to reiterate, so if you're using natural law and you're going thesis, antithesis, synthesis, which I'll get into more later, you really want to focus in on optimizing your thesis and keep improving it. It's an ongoing process. This is not just a one-time thing. And a lot of people, again, that's the problem with the black and white method of thinking, is when you think binary, you're thinking, okay, on and off. You're thinking beginning, end. It doesn't really ever end. That's the point of synthesis. That's why it's thesis, antithesis, synthesis in natural law. You begin with a thesis, kind of like a question. You find the opposing argument, and then you improve in the synthesis. So it never ends. This is why it's incredible. That's why I like portfolio construction, because it's not like, hey, I just constructed my portfolio and it's done. It's a constant moving process. That's why you always have to adapt and change in the environment that surrounds you, which is the markets. So here, starting off, WAYOF, what does that mean? So what are you optimizing for? That's the number one thing you have to think about, because again, if I were to just give everyone 10 coins to toss $100 into, well, would that really help you? Because that doesn't tell you when to sell. That doesn't tell you where to buy at. That doesn't tell you all these different things. If you should average in, how should you do this? Should you trade it? Should it be a long-term hold? None of those things are explained, right? So that's why you need to ask yourself, what am I optimizing for, right? So am I optimizing for a long-term hold? Am I optimizing for 10x gains in a month? What are you doing, right? So you have to kind of set your market and enforce it in that way, because that will dictate a lot of the other part of this process. That's why you need to set these things up in the beginning, so you have a good framework to build off of, okay? So then beginning with the end in mind, that kind of incorporates what are you optimizing for, but what do you want in the end, right? So at the end of this process, at the end of investing $1,000 in the crypto market, like let's say you have $10,000 to invest in crypto, that's maybe, let's say, like 5% of your portfolio, your overall macro portfolio, but for the crypto market, you want to invest 10K, well, just put up 1K and go, okay, let me run through this experiment, try exactly what I've laid out here, and then you can pick your own projects. Remember, so I'm not picking any of the projects for you. That's the point of this. I can show you how we would do this, how we would pick projects, but this is essentially the approach that you can apply to the overall system. So beginning with the end in mind, what do you want at the end of this process? Would you like a project that you were able to just de-risk, so sell off your initial investment and then let the rest ride? Are you looking to double your money within whatever amount of time? So you have to set that up. You have to write these things down. And then risk tolerance. So that's another very, very important thing. I'll get into the 4 pillars, which really comes down to and kind of leads into that research process. So your risk tolerance, you have to understand, okay, like, are you someone who's 18 years old or are you 60 years old, right? So they very, very different risk tolerances there, right? So someone who's 18 years old who's looking to invest in this market, I would say you should have a much higher risk tolerance, because if you lose this money, go get a job, go work, go start your own business. All things I talk about on this channel. Kind of be more, I would say, be more open-minded in this aspect. Especially when you're younger and you're investing, you need to be a little bit more aggressive. Again, it all depends on the individual person, but if someone's 60 years old, they probably have a much lower risk tolerance, right? So after that, we have the 4 pillars. So this I kind of showed you in this other thing. And by the way, as I explained in the beginning, all this scientific approach, all this kind of Socratic method of thinking, natural law, all these different things, it also applies to this. Exactly what I'm showing you, this exact process. So what I'm basically thinking about is doing some sort of series where I go over this portfolio construction, optimizing it month by month, and then maybe having some people using it and following along in the process, and then reporting what they've done, how they're improving for the next month, iterating, improving along the way. Because again, it's really on an individual basis. It's not just like this is the one size fits all approach. And there's no magic pill. That's what you have to understand. So for the 4 pillars, basically removing what you already know. So removing biases, removing kind of implanted ignorance that you may have around whatever it is. And again, that's not like, it's just true. That's objectively true. Everyone has kind of these biases. That's 25 cognitive biases. Charlie Munger talks a lot about that. But when in the crypto market, people already have these inherent things. For example, altcoins, like these terminologies, or crypto in general, cryptocurrency. They're not all cryptocurrencies. None of a lot of the things that I talk about on this channel is actually trying to be a currency. Now, you could put Bitcoin in that place. You could put Litecoin in there. And that's really where we start off in these 4 pillars. And again, if you think there's another pillar to this, I do think all of these kind of encompass the projects that I currently am interested in. But if you think there's another pillar besides these, you can let me know in the comment section, or you can join the Telegram group and we can kind of have a more long form discussion for it. Because again, I am not someone who's necessarily like so hard set in their beliefs. I like to have an open mind and experiment with different things and listen from multiple different perspectives. So the first category here, like I said, is currencies. Then you have protocols and platforms. So this is kind of like I wrote down blockchain app stores. So you can think about it like the mass adoption in the iPhone. So if the iPhone's app store was interoperable with Google's app store, so if you had a Google phone and you could download iPhone apps onto that, that would be like cross-chain interoperability between Ethereum and Solana. So basically with blockchain app stores, what I think of is what is the protocol or platform that something else is being built on top of. So what is the iPhone or what is the Google of this? So you can replace Apple with Ethereum, or you can replace Google with Solana, or whatever given blockchain project it is. But this is essentially the layer 1, okay? The layer 2 would be the apps in that app store. And that's where you have things like asset-based tokens. You have some value pass tokens. That's what I personally name them. Again, there's multiple different ways to think about this. The point is you adapt it to yourself, but I'm just kind of laying this out. Again, the questions that you kind of have to think through. Okay, so what are digital assets? What are crypto assets? Is it just Bitcoin and altcoins? No, that's a horrible way of thinking about it, right? That's why, it's hard in some videos because it's like you have to name them crypto. You have to say crypto and altcoins for people to know what you're talking about, but really it's just digital assets at the end of the day. And I'll probably do another video on this, honestly. It's kind of something that I've been meaning to address. Then you have asset-backed tokens. So these are things that basically taking real-world assets or derivatives, so things like the stock market with synthetics or Mirror Protocol. You have Amazon, so a publicly traded company that you have price feeds for. You can basically hook up a data oracle, like a decentralized data oracle, for example, Chainlink. And this is where people would say it's an altcoin. But again, that's an individual category that I would say oracles, right? So oracles are a project in the blockchain ecosystem. It's not just an altcoin. So again, kind of removing that idea, that kind of terminology. Then we have things like labs, so actual physical real estate. Apollo is doing it with commodities. I'm going to be doing some work with Apollo FinTech moving forward. asset-backed tokens. Then you have the value passes. So something like Binance token, BNB. Not only is it a utility token where you get a discount on fees if you're using the Binance trading platform, but there's other things. Basically, you almost have equity in the company. So that's really interesting. It's kind of this value pass through. I see things like I know Gary Vaynerchuk is doing something with NFTs where you get into a conference. That's kind of like a ticket. That's a value you get from owning whatever type of digital asset this is. And in this case, it's a value pass digital asset. So understanding these kind of four main categories you can break things up into, because when you go into doing your own research, you shouldn't necessarily be comparing Bitcoin, like it's almost in its own category to something like Rarible, right? Completely different in my opinion. Rarible is not trying to be Bitcoin. Bitcoin is not trying to be Rarible. So again, encompassing all these things in the category of crypto is almost a mistake, right? You really have to go digital assets. What is the different categories of digital assets? Those are the four pillars. Again, if you have anything to say about the four pillars, I'm happy to hear it. If it's critical, love it. If it's not critical, be a little bit more critical, because I always like to improve my ideas, right? So this is an ongoing process. Then 80-20 is kind of what I talk about in bird's eye view. So 80-20 Pareto principle, I don't think I need to spend too much time on this. If you've done really any reading at all, Pareto principle applies to pretty much everything. What is the 20% of the things that you're doing that dictate 80% of your outcomes, and then you eliminate the 80% of things that dictate the 20% of your outcomes, right? So you see these Pareto distributions all throughout the world, and it's very important to keep 80-20 in mind throughout this process. And then also having a bird's eye view, so really beginning with no biases, no kind of inherent ignorance that you may have, like the terminology. That's just an example of it. But like if for example, if you're watching this and you work for a project, you have an inherent bias or you're a founder of a project and you still want to have a crypto portfolio, well, you still have an inherent bias for that project, right? So keeping all these things in mind, just to recap there. So with the question stage, this is by far the most beginning one. Again, remember that the whole kind of like sharpening the axe approach is very, very important in this, in my personal opinion. So that's why I spend a lot of time on the questioning, because you need to set yourself up for success for the rest of this process, because the question part is what you'll be returning to. So remember, it's an iterative process. I'll get to natural law when I get to the hypothesis section, but just to recap, so what are you optimizing for? Ask yourself that question. Begin with the end in mind. What do you want at the end of this? What do you want if you're, so again, if you're doing a 10-month experiment, you have $10,000, you may add, like every month, you may just go, okay, $10,000 or $1,000 that month. So now it's September. You may go, okay, this $1,000, I'm going to start this process. I'm going to go through this whole thing. Sorry, train in the back. Again, Athens is beautiful, perfect weather right here, but I'm considering heading to Africa relatively soon. I was thinking about Morocco, but they have some lockdowns. But the point is, back now that the train's gone, the point is, with the beginning with the end in mind, is what do you really want out of this? So that's the most important thing. So what do you want at the end of those 10 months? And then at each of the month, you can kind of improve, track your progress. That's part of the analyze section. So begin with the end in mind. What's your risk tolerance? Really thinking about that and understanding this is, again, not a one-size-fits-all approach. You have to understand this is very, very tailored to your own individual situation. And the four pillars, as we just talked about, you can see it right here. And you can always rewind this. That's why I have timestamps throughout the video. You can skip ahead, skip back. So then you have 80-20 Pareto principle. I really identify those 20% of things that dictate the 80% of your outcomes, especially in this process. So if you're, if you went through the first 3 months of trying this and now you're returning, in the beginning, 80-20 is, you may just go, oh, that's interesting. I'll try and use that. But as you kind of re-go through this cycle, re-understanding, okay, I need to be focusing on those 20% of things that are giving me the highest leverage outcomes, right? Which would be that 80%. And then also having that bird's eye view. So removing any biases. Now, moving on to the research part of crypto portfolio construction, we have fundamental, on-chain, technical, and sentimental analysis. Basically, fundamental analysis, to summarize, again, this is in a whole nother video. It will be linked down below in the description. I refer to it a lot because it is very, very important, but it's basically trying to understand, zooming out once you've identified a project. So zooming out is what that first part was. Remember, so we talked about these four different types of digital assets. We have currencies, we have protocols and platforms, we have asset-based tokens, and we have value passes. And again, these are very, very broad categories. So once you've identified a category that you're researching for, so for example, if we're going with protocols and platforms and you're interested in Cardano, you need to go through fundamentals. So what is Cardano's white paper? Read through the GitHub, read through all these different things. Who's the founder? What do you need to know about this, right? So that's fundamental analysis. Again, I talk about it much more in the how to do your own research video. Then you have on-chain analysis. I personally like to use something like Glassnode for this. There is different on-chain metrics you can look at and different oracles that use with different tools. If you want, I can do a video on just on-chain analysis, but there's many different ways of doing this. There's some like paid services, but basically looking at the objective facts on the blockchain. Because since everything's transparent in the space, since everything's verifiable, you might as well use it, right? So then we have technical analysis. That's where you'd use something like TradingView. I have actually a full course on this. It's called Global TA, Global Technical Analysis. Did an 8-part series, all for free here on YouTube. That is linked down below in the description. And then sentimental analysis, that's going through things like over here on CoinMarketCap. Let's say we were interested in Binance. What we would do is we would go through some of their community engagement. So what's the sentiment? What are the people saying, right? So look at what's the engagement on Twitter? What's the engagement on Reddit? Are people actively using Telegram? Is it all spammers? What's going on with their Medium? All these different things. What's kind of the community around the project, right? That's what you want to be looking at. And that really is what researching is all about: fundamental, on-chain, technical, and sentimental analysis. You can probably come up with some sort of acronym like FOST, but we can, again, this is an iterative process, so maybe in October when I revisit this, we can make it up a little acronym there. You guys, we can talk about it more in the Telegram group, which again, link down below in the description. Moving on, so we have the question stage, the research stage. So the research stage, again, is something where, like I said, you want to identify a narrative, identify kind of a category. So for example, if we're looking at different categories, these kind of fit in. So things like interoperability, things like file sharing is another thing, like Filecoin. We have things like masternodes, all these different things. So you want to identify a category, research that category, find what you actually want, and then break the project up into percentages, right? So in this category, which we'll talk more about the actual experiment phase over here, but in the kind of category, you have to set up an experiment. So it's an if-then statement. And again, we'll talk about that in the hypothesis stage. But for here on the elimination stage, this is really where you want to go, okay, once you've identified some projects that you're interested in, once you understand kind of this question stage where you have to look at the 4 pillars, you have to do your own research in the individual project, then you have to go, okay, what are your personal strengths? So do you come from the background of you've been working in the gaming space? Maybe you've been working in esports. Well, maybe NFT gaming, kind of blockchain gaming is something that you should really focus in on because that's a strength. Beyond that, you also have to think about what do you enjoy just talking about, right? So if you were on a Saturday night with friends, what would you talk about? Is it sports? Is it investing? Is it business? Is it what is it, right? So what are your personal interests? And that kind of fits in with the magnet test here that we'll get to in a second. But this really comes down to eliminating the waste. So this is where 80-20 really applies, is if you have, let's say, 10 projects, a group of 10 projects, just to make it super, super simple with that $1,000 example. Basically what you can do is go, okay, I have 10 projects. If I put $100 in each project, I would kind of be spread a little bit thin, right? $100 is pretty small amounts of capital to have in something. But if you wanted to, you could do this to start out. That would be an experiment. Then you could iterate and improve and go, okay, but what about my strengths? What if I go 80-20 and basically you want to focus that 20% and do something with high leverage, right? So you can leverage your strengths by going, I know about this. I know about Nifty Gateway. I know about, there's a lot of like Axie Infinity, these different blockchain games, but let's say you know about that, or you come from a finance background and you know about things like just some back-end building in different exchanges. Maybe you're interested in, Uniswap is doing interesting things, or SushiSwap is doing interesting things. You can focus on your strengths. That's the main thing. And when you do that, you inverse it and you go, okay, what can I eliminate? What can I get rid of to kind of declutter? And then in another experiment, you can always focus in on that clutter when you have more time. But focusing in on the high leverage opportunities is very, very important. Then the magnet test. So once you kind of have this basket of things that fit your strengths, you can kind of spread them all out and go, okay, what catches your eye? What are you really interested in? Like, what is fun for you? Because trust me, I've ran multiple businesses that make a lot of money, but the businesses that last are the ones that you're passionate about, the ones that you want to do every day. It's good to have like a kind of a machine running for you, like a business that's going 24/7, 365 if it's set up properly online. But at the same time, the things that you're passionate about, the things that you want to work on, like for me, it's traveling, it's emerging markets, it's investing. Um, that's what interests me, right? So for some people, it's not at all. They have no interest in investing. They have no interest in crypto. But let's say you're specifically analytical minded and you want to learn more about data oracles, right? So how does Chainlink work? How does API 3 work? That's the magnet test. So that would be the thing on your strengths. You maybe have categorized some things, and then you go, okay, what project is most interesting, and then hone in on that. And with Occam's razor, what I use it for is just going, okay, the simplest decision, right? So what is the most obvious approach, and go with that. Don't waste too much time on the elimination phase. Again, the whole point is eliminating the time that you would spend on this, right? So that's very, very important. But beyond that, really what I will say when it comes down to identifying crypto projects. So let's say we were over here on CoinMarketCap. There's a bunch of different things you can use for this. But let's say you're really, really interested in finding a project. You've done the strength test. You've done everything else. You're using Occam's razor now. The main thing is returning to that research phase where you're looking at the technicals. And you want to look at something where you go, okay, let's say out of this, so we have the month. So here, let me just draw it here. We have the overall month. Go to the drawing here. So we have the month, and we're splitting this up into 4 different parts, okay? So we're splitting it up into 4 different weeks. Now, let's say you have 25% here, and you're looking to average in, okay? So you've identified a project, and let's say it's one project that you really, really want to focus in. So you're going to put 80% into that project. This is for this month, right? So we're breaking it up into 10 months. Out of each of these months, you have $10,000. In this month, you're putting in 1K. If you identify a project that really fits this Pareto principle, it really fits this strengths, it really fits the magnet test, and you just have simplified your decision, you've done your own research, what you can do is you can test it out, right? So let's say you're doing 80% of this, like I said, into this project. The other 20% you're going to spread out into maybe lesser projects, right? So projects that are maybe catch your eye, but you want to just diversify a bit from this one kind of centralized project. What you could go is do something like 25%. So if we're doing $800, right? So out of that $1,000, so we're doing $800, you could easily break it up, right? So what you could just do is go, okay, I'm going to average in $200 at the beginning. So you're not having that sunk cost of, hey, if your risk tolerance is pretty low, and when you initially put in that capital, it drops a lot, you're going to be kind of sad for the rest of the month, right? So what you can do is actually make it interesting, kind of gamify it in a way and go, okay, if then, so this is where a hypothesis comes in and kind of like building the experiment. So if project goes down 25% again, then you go, okay, I'm going to put another 10% in. And you can kind of have fun with it. And that's kind of building the experiment, right? So that's kind of building the whole thing. Beyond that, I don't want to spend too much time on this. Maybe I'll do another thing. I don't want to get caught up in the details there. But basically, to recap the elimination phase, you want to look at strengths, you want to look at the magnet test, and you want to look at Occam's razor. For your hypothesis, this is really the narrative. So what is the individual narrative you're going after? We were talking about blockchain gaming. We were talking about oracles. We were talking about decentralized exchanges. What is the narrative, right? So if NFT or blockchain gaming blows up, then maybe I don't know, Axie Infinity increases 50%, whatever. If then, that's kind of your experimental phase. Natural law, really thesis, antithesis, synthesis. To basically break that down, this is what it looks like. So this would be your thesis. So whatever your kind of question is, so the if then statement. Then you have the antithesis. So what is the opposing argument? What's kind of the Democrat to the Republican, or the I don't know, like atheist to the Christian, right? So that's kind of one way of thinking about it. Then you have that would kind of be your antithesis. And then from that, it's an ongoing process, right? So from that, you have the synthesis. So the synthesis looks like this. You can kind of draw a circle and do one of these, right? So this is your synthesis. This is really where you've kind of collected the data, and then you just bring it into a new thesis. So that's kind of the experimental approach. Again, natural law here in ancient Greece, so gotta use that. If-then statements. So build the experiment. What is the individual project you're investing in? So if you're investing in Axie Infinity, if-then statement. If blockchain gaming has so-and-so catalyst, then this. Okay, so that's kind of your experiment. You're using natural law. This is kind of the testing phase, and then you have the analyzing phase. And also, I will be cutting this off a little bit short. I definitely will do a part 2, but The thing I'm recording on, I realize, is about to, it has low battery. So I'll definitely do a part two. Let me know in the comments if you have any questions so far. But just to recap here at the end before this hopefully doesn't die and I lose the whole thing, we have the analysis phase. This is like the synthesis part. So what did you do right? What did you do wrong? Iterate and improve, report observations, adapt. And this is the ongoing process. So this is that synthesis phase. But that's the basic framework. That's what you need to understand. That's all for this video. Again, if you enjoyed it, like, subscribe, button all, Invest Global. Join the Telegram group, link down below in the description. Twitter and Instagram at InvestGlobal_IO. That's basically all. All the videos will be linked down below. Everyone, hope you enjoyed. Invest Global, and until next time.